Thanks so much for your company. I am Pius Kujubaka, looking at our stories. Governor of the Bank of Ghana, Dr. Johnson Isiama, has revealed that the central bank is considering a price hedging program for the country's gold exports. According to him, the move is aimed at maximizing or minimizing potential losses should gold prices decline due to developments in the international market. Dr. Isiama made this disclosure at the Stanbic Bank Graphic Business Breakfast meeting held today. More in this report.
The action by the Bank of Ghana is timely as some firms, including Barclays PLC, have projected that gold prices could decline in the coming month. Dr. Johnson Isiama raised serious concerns about the continued use of foreign currencies, particularly the US dollar in domestic transactions, describing the trend as a growing threat to Ghana's monetary stability.
And let me say that we are currently working on a price hedging program, such that even if gold prices ultimately suddenly fall, we are able to limit the consequences therefore. Now, the current account surplus improved significantly to 2.12 billion as at the end of the first quarter of this year, and you can compare that to a mere 66 million during the same period last year. Let me be clear, colleagues. The more value we keep within Ghana, the stronger the Cedi becomes, and the more sustainable our macroeconomic trajectory, therefore.
President of the Ghana Union of Traders Association, Joseph Obin, said traders are sometimes faced with difficulties in accessing dollars from the banks. This, he said, has resulted in some going to the black market due to the disparities between rates quoted by the banks and rates quoted by Forex bureaus.
Business as it is on the ground, those who do not have documents do not go to the banks at all. They don't go, and they have their own way of doing this transaction. And it's very easy for them, very convenient for them, and they are even more than those who come to the bank. I'm talking about those who have legitimate documents, who go to the bank now and do not have access to the Forex. The honors lies on Bank of Ghana to find out the reason from the banks.
Senior country partner at PwC Ghana, Vesh Ashiabo, called for economic restructuring to anchor the stability of the city for a long period of time.
We are about trust and transparency. So the currency is a store of value. So at the end of the day, what individuals and businesses are trying to do is to ensure that they don't lose value. So to the extent that we have more transparency, and as I said before, I think Bank of Ghana is on the right track in that regard, and it is sustained, and people gain confidence that they will not lose value by holding CDs. I think regulation has its place, but I think there's a happy medium between the two that we can achieve so that the gains can be sustained. And therefore, I take Prof's point about everybody having a role to play. I think to the extent that Bank of Ghana and the fiscal authorities can continue to work on the macroeconomic side of things, and that confidence can be sustained.
The Bank of Ghana maintained this hedging program may go a long way to deal with any potential shocks to the country's export earnings.
Well, the Bank of Ghana again has maintained that its foreign exchange market intervention for the first quarter of 2025 has not depleted its reserves. Now, the Bank of Ghana, according to what Joy Business has picked up, added that $1.6 billion to its reserves for the first 6 months of the year, surpassing the International Monetary Fund's reserve build-up target of $493 million for the first half of 2025. And we want to explore this better as we've been joined via Zoom by economist Dr. Edu Usisakodie. Thank you so much, sir, for making time to speak to us here on Business Live. And first off, is your assessment of the BOG's claim that recent Forex intervention have not depleted reserves, despite the IMF reporting showing about 1.4 billion sold in the first quarter of this year?
It means that we had been building reserves faster than earlier anticipated. We saw from our commitments, both the previous administration under MPP and the current administration under NDC, both have showed commitments to building of reserves as prescribed, even far ahead of IMF targets. So we've done well as a country. So his point that they might have intervened in the market, but still they were able to build reserves, it can be true. But I always say that it's better to keep the exchange rate at a stable rate than to allow this sharp increase and sharp decrease of the rate. We saw that our Cedi was appreciating very fast at the beginning of this year, and many economists were of the view that the curve was too steep, and that if the curve is flat, it's far better than a steeper curve. In other words, in the up and down of the exchange rate, if it was caused by a good structure of the economy, export-based economy, then we can be happy about it. But if it's caused by the intervention, then the question is about to what extent would the BOG intervene, or up to how far are they going to intervene? So yes, they were able to intervene, and yes, they were able to build reserves, and it's possible. But my position is that they could have limited their intervention and allowed the other factors to determine the exchange rate and wait, because gold price was in our favor, cocoa price was in our favor, remittances were in our favor. In fact, the international crude oil price was also in our favor. So the BOG could have limited their intervention, allow these factors to interplay and determine the exchange rate, and then when the need arises, in other words, when we get to the point where the Cedi is depreciating, then they can intervene. But they kept on intervening, plus the other factors that caused the appreciation. It's better to keep the exchange rate at 15 cedis to a dollar for like 1 year, 6 months, or 1.5 years, than to have this up and down. Today is 12, the next day is 13, the next day is 17, the next day is 9. It doesn't do well for businessmen and women at all, because they cannot plan with it. That is why when there was a call by government for some traders to reduce their prices, they were reluctant to do so because they were so uncertain about the movement of the exchange rate. So I think a stable exchange rate is far better than a sharp increase or a sharp decrease of the rate.
Let me find this from you. How effective is the gold for reserve program, for example, as a tool to reserve, build up, and of course, exchange rate stabilization?
It is important. It is important, very important. In other words, you have your store of value in gold as a central bank, and you can easily sell your gold for dollars anytime you need dollars. I saw my friend Joseph Obin talking about, on behalf of Guta, about how much they demand for dollars to make importation. So once you have more gold reserves, you can easily exchange it to dollars, and then you can intervene and sell it to businessmen and women who need it to import the items. Remember that Ghana still is an import-dependent economy. In other words, almost every item we consume in the country is imported. So we cannot, do away with this forex market. So it's good to build more reserves. And I want to encourage the government. I think the Gold Board has also started well. If they can stay committed to just building more reserves in terms of dollars, our dollar reserves is hitting $11 billion. That's about 4.8 months of import cover. That is very good. Our gold reserves have gone around 32 tons, which is very good. So we should keep building. We must leverage what we have. Ghana today is the #1 producer of gold in the whole of Africa. Last year, we produced almost 5 million ounces of gold in this country, and we are #6 in the whole world. So we have to leverage what we have, and therefore it is important that we continue with this building of reserves of gold, and that anytime the government needs any currency, they can sell the gold for them.
With that said, to what extent do you think speculative behavior in the informal forex market, for example, impacts actual exchange rate trends, especially in economies like Ghana?
Yeah, the informal market is a disturbing factor. Many people call it the black market. It doesn't give the Bank of Ghana the autonomy that they would want to have over the forex market. And so whilst the forex and the interbank rate is around maybe 10, the black market will be around 11, 13%, which is not good at all. The informality of our economy is always a disturbing factor. Even when it comes to remittances, there are some remittances that do not go through the official channel. And so the Bank of Ghana is unable to record them. So to the extent that the Bank of Ghana doesn't have full control As somebody said last year that Bank of Ghana has the rate, Abochi has the dollar. So this is not something good for economy at all. We should try as a country to manage the black market and bring it to a level where Bank of Ghana would have full control over the forex market.
And as we wrap up the conversation, with the Cedi appreciating and, of course, investor confidence reportedly improving, what steps should Ghana prioritize to transition from macro stabilization to long-term economic stability?
Stability, yes. Yeah, our Cedi has been appreciating. If it was from a stronger economic growth, it would have been more appreciated, but it's from interventions. To the extent that we have the crude oil price, international prices of gold and cocoa, and also remittances to our favor, I think it boosts confidence. We must leverage this and improve on our exports. I think the most important thing now is for us to move, like your question is suggesting, to dwell on this, step on the stability and grow your economy. So now everything, I'm just waiting for next year's budget. Everything from next year's budget going must be about growth in the areas that can create more jobs. With the stability, if we get a lower inflation rate, maybe single digit is possible this year, we also get a lower, because once inflation declines, policy rate is expected to decline, and then the businesses can borrow at a lower rate. So if we are able to pursue even a lending rate at a level of, say, 10 to 15% lending rate, though it's not too much, but it's okay. It's a good starting point for us to have a lower lending rate so that businesses can borrow at a lower cost and expand. When we are talking about the expansion of the economy, we should not always be limiting our conversation to the government. The private sector has a huge role to play. In fact, when you talk about the almost 11 million Ghanaian workers, only 2 million are employed by the government. The remaining over 10 million are employed by the private sector like Joy FM, Joy TV. So we expect lending rate to go down so that cost of doing business will go down and the businesses can expand, create jobs for the teeming youth who are always queuing for jobs. And this is what we call an ideal situation. Change the structure of your economy, build the industrial base. Today, if the government is saying they are not going to commit resources to the 1D, 1F, they should come up with a new program of industrialization. Let's build the base, build agriculture, build manufacturing, and then we can always be singing hallelujah.
Dr. Edu Osisako, thank you so much for your input this very moment. I truly appreciate it. Let's shift focus to some other stories. London-based Barclays PLC has projected that the Cedi will reach 12 cedis against the US dollar by the end of this year. We have more for you in this report.
Local currencies currently trading at around 10 cedis, 45 pesos to $1. This means the Cedi may lose some grounds or maybe depreciate in the coming month to reach this new projection of 12 cedis to the dollar by end of year, according to Barclays. The local currency is said to have appreciated by more than 40% against the dollar. But based on this projection, it appears we may not end the year with not those high numbers when it comes to the Cedi's performance against the dollar. Barclays PLC in the report argues that their forecast is based on the fact that gold export revenue, which has been a major factor for the Cedi's good run, may be slowing in the coming months. It is also raising concerns about the expected government increased spending from the second half of this year and the expected cut in the policy rate. But the Bank of Ghana had in the past challenged these projections, insisting that it is not based on current development in the economy.
All right, now on to one of our lead stories. The Chamber of Petroleum Consumers Ghana is predicting prices of petroleum products will increase by about 8% in the next pricing window. According to COPEC, petrol is expected to go up by 6.47% of the current mean price of 11 cedis, 95 pesos per litre, while the price of diesel is also expected to go up by 9.30% of the current mean price of 12 cedis, 97 pesos per litre. Let's bring in COPEC and Executive Secretary Duncan Amwa joins us via Zoom for us to have this conversation. Duncan, pleasure you could join me. Now, what is informing your prediction?
Thank you, Pius. What is accounting for this imminent increase will be largely the 1 Ghana Cedi levy that is set to commence. We are set to commence paying from tomorrow, according to the GRA. Ordinarily, prices could have been relatively stable for this window, if not even some reductions. But then you are seeing a situation where the net effect of the one Ghana, what the international market numbers are saying, what the Cedi stability or otherwise is also saying, and then what the new levy is indicating. Chances are that for petrol you'll be paying about 6-7% more on current pump prices, whilst diesel could do as much as 9% more. LPG around the same 9% figure effective tomorrow morning.
And then we've seen OMCs adjust prices immediately while market prices go up, really. But what happens if they indeed go up tomorrow at the pumps?
Pius, I do not foresee any of the oil marketing companies wait even an hour past midnight tonight, because any product that will be picked from this midnight per the GRA directive would attract the 1 Ghana Cedi levy. And I know for a fact that none of the OMCs would want to shelve this 1 Ghana Cedi, and offset it anyway anyhow. So I am certain that by midday tomorrow, most of them would have adjusted their pumps already, because clearly GRA will be on their necks. Clearly they would need the money to be able to offset their tax liabilities with the state. And so, unlike in previous instances where prices declined and it takes them 2 days, 3 days sometimes for it to reflect, we are likely to see these adjustments reflect by 6 a.m. tomorrow across most of the OMCs.
And what can be done to cushion consumers? They are likely to bear the brunt.
Pius, we have said this time without number. The current price build-up, the PBU, is fraught with a lot of...
It seems Duncan's line is frozen.
No taxes.
All right.
That we can, it has to do with the UPPF. Pius, I don't know. There's a tax component on petrol that clearly can be scaled down. It's called the UPPF, which is the fund used to pay for the transporters that move product across the country. What they are being paid is about 45 pesos, yet the UPPF fund is collecting almost 90 pesos a liter. There are some inbuilt taxes in there that is going into individual pockets. We want the government to pursue that and ensure that whatever monies that is not coming to the state is not, helping the consumer. They take it off so that the 1 Ghana Cedi can be accommodated reasonably. Anything other than this, I foresee a situation where in the future, if international market prices do go up, the public could be up in arms against the 1 Ghana Cedi. But in the interim, the price build-up gives us an indication of what we could do to come down further on prices so that the consumer does not even feel the brunt, full brunt of the 1 Ghana Cedi levy in force tomorrow.
Executive Secretary of COPEC, Duncan Amwa, thank you so much for agreeing to speak to us here on Business Live. This is still Business Live. We have a story for you after this break. Hello again. Executive Director at the Center for Environmental Management and Sustainable Energy, Benjamin Insia, is urging the government to exercise caution in the ongoing privatization process of ECG. Government is aiming to finalize the ECG private sector participation deal by September, but Mr. Insia warns that rushing the process could lead to failure. Speaking to Joy Business, Mr. Insia emphasized the need for a clear and comprehensive roadmap to tackle the commercial losses ECG continues to incur.
Yes, I think that in most of these countries that have seen a success, we've also observed that revenue collection rates are very high. And if the revenue collection rates are very high, it means that some of this private sector participation or participants could improve service delivery and also improve efficiency by reducing some of these system losses that we're observing in Ghana. And those reductions will also rechannel some of these power into underserved areas in our country. Fortunately, we are doing well. I think if you look at even most of the data that has been channeled by the Energy Commission, underserved areas are even doing about 70% of the total electricity consumption. So we just need a little, about 10 to 15% to even catch up at universal benchmark. So in terms of redistribution of electricity in Ghana, as a country, we have done very well. I think the major challenge has to do with the sustainability or the debt sustainability of the sector. And we think that privatization is one of the key ways to address these debt issues. But I and the team at SEMSE will want to urge government to show a bit of restraint and not rushing this whole privatization agenda, because if it is rushed, we may fail at the end of the day, because other countries rushed and fail. We need specific time, we need new laws, because the government has made us aware that they are likely going to merge NEDCO and ECG and create certain boundaries, and within these boundaries we zonalize and then resell power to these private sector participants. We need to address that. Have we started merging these two companies? The second part is that we also need to look at the commercial losses of these particular companies for us to be very viable and also attract the necessary investors in the sector. As a country, how are we addressing the commercial losses? I think that within the shortest possible time, government must be clear on how they are going to address the commercial losses and the already existing debt in the power sector. If they're able to address them within the shortest possible time, it means that those investors who might come in will be ready to commit certain resources in modernizing our system and also retaining the necessary revenue they are expected to retain.
Radford University College in Ghana has announced a new partnership with Galileo Global Education aimed at strengthening entrepreneurship and facilitating student and faculty exchange programs between the two institutions. The collaboration is also expected to pave the way for the introduction of a Doctor of Business Administration program at the Radford University. Speaking to Joy Business after a brief ceremony to formalize the partnership, President of Radford University College, Dr. Martin Luther King Obeng, described the initiative as a potential game changer for students.
The partnership with ESG is an educational partnership for mutual benefit. Programs include undergraduate programs, master's programs. Then ESG itself is doing this DBA program. Now, Radford University College has been a unique university since our inception. We've been able to come up to the public space with programs that were hitherto not done in the private university or in a public university. Like we started degree in fashion design in Ghana, degree in physician assistantship in Ghana as well. This and many we have done, and strategically, as a private school, to be able to be relevant in the market space, you need to get partnership, you need to get yourself identify with some of the big players in the world to be able to do programs that will solve or fulfill the needs of prospective learners. And that is why we have just joined our hands with the biggest tertiary education network in the world, just to be able to do this.
Let's now go to myjoyonline.com/business for some quick read. Hearing of $450 million suit against Deloitte begins today. And also on that portal, you will see BOG considers price hedging program for gold exports. That's according to the governor at the Stanbic Bank Graphic Business Breakfast meeting today. And 10 key takeaways from BOG Governor Dr. Addison Isiame's address at the summit. Also on that portal, you see Ghana urgently needs a pricing regulation authority to stabilize the economy. We have more stories for you when you log on to myjoyonline.com/business. Always a delight serving you. I am Pius Kujobaka.